Welcome to Learn With Us. Today on the show, Marcin Jasinski.
Hi, Nikos.
It's
Hi,
been
everyone.
a while, man.
Yeah, we stay in touch, but it's been a while since the last podcast.
It's been a wild 3 months.
Oh yeah, it's been quite extraordinary, to be honest. I don't think I've ever seen anything like that, to be honest. Maybe just after during 08, entering into 09, but it just lasted a few days. Now we've had 3 months.
It's been like our targets are something like between 1 and 2% a month, and if we get those every month, we're happy. But the last 3 months, it's like an average of 7% a month, and then this month I've got 10%, and you're up at something like 22 or 3%.
Yeah, it's almost going to be 24, I think, when we update tomorrow, because today is another great day. And so I'm competing with November of 26-25. So we'll see whether it's going to be Jan this year that's the best month so far in eToro, or it will be November. Remember, in November, all the cyclicals went massively up, so you could kind of double down on. I didn't have that much exposure, but all this kind of neglected UK stocks and so on went massively up. This month, we have a little bit of a run on some smaller size companies in the US. And so I have 1,300% on BNGO and almost 1,000% on TRXC. So definitely good calls.
Yeah, I owe MJ a haggis because I'm almost 1,000% up on TRXC, which is a robotics company.
Indeed.
that MJ asked eToro to put on eToro, and
Indeed,
they did.
5 months ago, I asked them because it popped up on my screen as one of the actually quite interesting thing, because cats, they operate a lot on the stomach, and it's actually much more efficient than a human and much cleaner and much safer. So just to be sure, these robots don't operate on the brain or on your eye, not very difficult surgeries, but those on the stomach, they are quite easy. They can do very well, and they were just super neglected because of the COVID, because it was a non-essential surgery. So no one they just were there gathering dust, and the future was uncertain. But when I saw they have enough cash till end of Q1 this year, and now they just raised another 31 million, an amazing stock, and it's one that used to be quite high in the past, and then it was just totally smashed and battered, and just no one wanted it anymore. But I like those, I like those cheap, good companies where no one likes, because if you buy enough of them, then some of them pop up, and then it's quite interesting.
I think if we get like 1 out of 5 correct on these penny stocks, you can make break even. But if you get more than 1 out of 5 correct, you can make a profit.
Yeah, absolutely. I mean, well, we 10x on TRXC, so you can get 1 out of 10 right, and you're break even. So I wouldn't necessarily call it a penny stock, especially this one, because it seems very small, but at the moment it's actually at 500 million plus valuation. So it's a healthy unicorn now. And it's a serious company with serious products, and they've been around for a while. And then obviously they're trading below $1 at the beginning when I wrote about it. But I'm seeing them. Let me see on my. Don't have eToro on the second screen, but they're 4.2 now. So and quite a big valuation. So it's not really a penny stock. I found a penny stock now that I've wrote an article about this morning, and so this is more a penny stock really, because it's 80 million. But when you have 600 million, I wouldn't necessarily call it a penny stock.
Mm-hmm, mm-hmm. So one of the topics that we want to talk about today also is we both feel a bit nervous with the economy. We think that there's a pullback coming, but we don't want to call the top, because then we were fighting against the Fed. So we're just wondering, like, what are you doing defensively?
That's a great question. So I've actually, it's quite interesting because when you generate 22% on a month, you would think that I'm absolutely doubling down on some risky asset. But if I just let them run, I would probably be 40 or 50. But well, first of all, I have 30% cash. And for me, it's a lot. I never see that more. I usually have between 5 and 30% cash. Usually 30 is really the max. So today I was able to buy some here, some Capita. I was just quite happy with the prices. But I am expecting a downturn, and at that time, I would like to buy some companies that maybe I was late to the game. I expect them to correct quite a lot, and then hopefully pick them up. So that's one move. Another one is I have quite a lot of shorts in the portfolio via ETFs. So I have VIX, volatility index, VXX symbol. And this is a very defensive instrument, one of the most defensive instruments you can have. This one catapults in events like we had in March 2020. It goes several 100% very quickly. And it's basically inverse correlation, so to your long exposure. I also have an instrument called TZA, which is inverse correlation to Russell 2000. So it's like shorting small caps in the US. And again, I sit there risk free now. It took me a long time to really, I've been punished before for having leveraged, and you know how unhappy I was about it. So I learned really the risk metrics, and because I have those inverse correlations, I finally was able to. I never exceed 4 now, and I'm sitting at 3 now, even with those companies going 1,000%, because I do take profits from them. I don't just let them run, and I constantly rebalance the portfolio so so it's in good proportions. I don't want to have 1,000% stock to, I've seen a popular investor who was 70% value Tesla. So to me, it's not a portfolio anymore. It's just a Tesla stocks with some derivatives. Mm-hmm. So I have a lot of, and I'm actually short Tesla, short Jumia, short Netflix. I closed Tesla and Jumia today because we are experiencing another super run, whether it's Robinhood or I've heard it's Reddit now. Today the game GME is Bloomberg is talking since the morning about it. It's just that did something amazing, and it's over. It's GameStop. It's over 100% sell short positions on it. So it's like a super massive short squeeze, because even to unwrap it, you basically you're basically buying the stock or borrowing the stock. So I also bought what is it, the gold ETF today, the one that has very low volatility. I think it's AIAU. Okay. This one, that's even it's a iShare Trust Gold. It's a very low volatility, so I bought this one, quite a big portion of my portfolio today. And I am diversified. I'm probably one of the most diversified PIs on eToro. I have a lot of India. It's one of the biggest exposures I have. I have quite a lot of Brazil. I mainly invest in Europe, but all across, whether it's Zurich or UK. I have some US tech stocks, small. Then I have the hedges. I have copper in my portfolio, which is great hedge against inflation. So I will probably increase that. I have US dollar long on leverage because we have a historical low in terms of the price. It's almost historical low, but a historical high in terms of retail investors shorting the dollar. So I think it's time to go up. So I really spend a lot of time, almost all the waking hours, to try, especially now that we've generated so much profit. Especially now, I try to be even more defensive. So I bought your favorite stock, GSK, about 4%. I bought it with X2, a 4% up now, which is great for a company like this because it's a defensive stock. It's really, the price is very interesting. And so it's quite a safe haven, really. So I do a lot of, I care more about the risk than about the return, if I'm brutally honest. Mm-hmm. And the returns, they're actually quite a big surprise to me because they're much bigger than I thought they could ever be on a month.
Yeah, I'm looking at I've got like I think it's 1.7% allocation to TRXC, but the value now is almost 10% of the portfolio. So it's, I mean, you look at the chart, you think it's just hit another all time high for the year, and for me, it just looks like it's going to keep going up because it's not behaving like a bubble yet. It looks like it hit 4.2, it went down to 3.2, and it went straight back up to 4.2 again.
Yeah.
So
4.2 is a very important number because it's actually a 200 moving average, 200-day moving average. And a lot of people like me who have access to those tools and look at the market holistically, we do look at 200-day moving average. So if you will, it just came back to 200-day moving average, but on massive amount of positive news. So you could argue it should be much more than 4.2, because the company is finally doing well. So it's, 1,000% growth, but it's if you look at valuations and moving averages, it's deserved to be there. Mm-hmm. It's one of those that is not just pumped. When I look at GameStop, I want to put I just got a notification that Jumia is slipping 8.1%, and I unwrapped it. So you cannot be right all the time.
Yeah, I had some really bad things about Jumia from people in Africa. Contacts says basically people in Nigeria are laughing at people in America buying this stock because it's just there's nothing behind it. So
yeah, I have a friend in Monte Carlo who works there, and he says it's a big short.
Yeah. Yeah, this whole Reddit thing is kind of scary because it's a lot of popular investors are getting copiers from newbie investors, and they're just looking at profile stats, and these people are riding on these pumps from Reddit, and this, as soon as you can predict the market will adjust, and so it's not like this Reddit stuff's going to continue. It's a temporary blip. There'll be some kind of law that's made to stop that happening, and it's hard as a popular investor like us. Well, you get 20%, but it's just like normal popular investors that are getting 1 or 2% a month of stable stocks. They're being outshined by all these people investing in penny stocks like us. Well, there's people that are investing 50% portfolios. I've got maybe between 10 and 20% allocated to these riskier stocks.
Yeah. Well, I'm glad that you got a piece of the pie because, it boosts your numbers for TRXC, and you have a very defensive portfolio, Nikos. That's very, very interesting because I think, people who want to protect money, I'm more into capital preservation now than ever, really, because, I have some people who declare they want to put 7 figures, and investing $1 million for someone is I mean, it's the same as investing $200, but it's just that it's not even a pressure. The necessity to perform is just much higher. It's not, even at the beginning, let's say I could say, well, there's no COVID and buy a National Express and make 120% on it and be very vocal about it. Now it's, I'm scrutinized in a much bigger way, via phone calls, via, my performance. There's quite a lot of money there. And, and you need to be responsible. I think, trade responsibly should be a bit of a mantra now because, 10% is still not so huge. But if I had 11% exposure to TRXC, I cut it drastically. I more than halved it. And not because I think it will not grow anymore. Actually, on my risky one, when I'm like 120% this month already, I had more exposure. But again, I care more about being responsible and generating solid return, which I think you're also very well positioned there. And so you need a good mix of defensive stocks and growth stocks. And I think you need a good diversification. I think people have neglected that a little bit because they've been lucky on some 1 or 2 big bets. But they need to remember that at any time, this bet can go against them. So I don't know if someone is X5 on Jumia, they're losing 40% today, just in a matter of an hour. So I think my message would be, I think, I would always prefer PIs like us who've been around the block and generated the return consistently. Although I've been on eToro shorter than you, but I've been in the industry for quite a long time. And I think, to me, if I read that someone is targeting 2% a month or 20% a year, it's more, I would have more trust in a person like this. It's more realistic. If I see someone promises 100%, I just want to be as far from them as possible as I possibly can. Not because I cannot generate the return like this. It's just because it's a bit of an unrealistic expectation. And if someone tries to make it, they will take unnecessary risk. It's a patience game. It's a diversification game. It's a research game. And some people get lucky, but equally, if you always play on being lucky, well, 1 year you'll become very unlucky and just get wiped out. So it doesn't make any sense.
Yeah, I'm surprised you got quite a lot of notifications going there, man. All day long you must be like, people like, what? He must be really popular or something like that, but you're getting your prices or something.
Yeah, sorry for that. I need to switch it off. Last time we switched it off. These ones are only eToro followers and copiers. I am getting a lot of copiers because people are very cognizant of the fact that I was the first on TRXC, and I think the beauty of eToro went for me from just being able to copy to also being able to track what someone wrote. And I write a lot, probably one of the most active elite PIs, but I do it because when we were in the industry, communication was key. At 7 a.m, everyone was there, and we were talking about what we will do in the next 2 hours. Exactly every stock, every market, and every day. We never stopped. There's no one's also like chief trader has a headache, we don't do a morning briefing today. No, it's so I try to share a little bit of this life on eToro because that's how we always communicated. And now I cannot pick up all the phone calls that I have, but I can write and I can say, well, have a look at eToro. I wrote about it this morning. And so I'm getting quite a big spike of copiers because I called it on TRXC and I called it on, it wasn't me, it was not my idea. I had this Cambridge tech guy writing to me on LinkedIn about the bingo, BNGO. And this one is 1,300%. And it's a very interesting company. And I never really bought anything COVID-wise because, I was quite skeptical about it. So I did not buy a Pfizer or Moderna, but I did write an article about it. I did have AstraZeneca because I liked their partnership with Oxford University. But those smaller ones, they also can play a very big role. So BNGO, the analyst rating went from $2 to $14, sevenfold increase, which is quite exceptional. A company called NEO, similar things were happening when I was actually pitched that stock at 7. So I did not buy it. I actually shorted it at about 14 or 18. So I think it's good. It's good to make a lot of research and then decide, well, maybe this one will be around. And if you find a company that's maybe, 80 million, 100 million, and maybe it has a potential to become a billion company, $1 billion company. So I think if you do enough research, I have a new one. It's called, the ticker is INPX. It's massively down today, 10%. But so this is more like a penny stock, because it's only 82 million valuation, and they actually do a lot of like house intelligence, sensors and things like this. But they did win. I published a post today. It's pinned. I published a post, an article from Wall Street Journal. They did win the IoT Product of the Year award. So again, it's not something out of the blue. It is actually something that the product is already battle tested. And so if they are successful, there's only really Cisco competing with them. Well, they may be bought by Cisco, or they may do something better than Cisco. So So it's quite interesting. But again, I think you're doing it quite well as well. I know you were exposed to GSK and gold quite a lot. Both are quite defensive. But I would definitely tell people who don't just invest or don't play with their money to buy a Lamborghini, but they actually invest. I would never put more. I'm quite not well known now, not putting more than 5% in any stock, and that's a bit of a rule, and it's sometimes a regulatory rule for funds. They always have to take profit, so they lower the position to maximum 5%, and it's a good rule of thumb. I think I believe in modern portfolio theory, which says you should have between 20 and 50 stocks in the portfolio, and I think it's a pretty good indication. I think
I'm up to about 80 or 90 now. I just like collecting things. And
yeah, maybe you should trim that. I noticed I trimmed that because I was just not able to follow the news on all of them, and I found myself quite irritated that I don't know everything that's happening. And so I trimmed it quite a lot to about 30, 35, I think. Now I'm at about 50. And I would recommend you, Nikos, to trim it. You had some good advice from our friend who reviews profiles. I can't remember if he referred
Andrew Haddon, Felix something.
Andrew, yeah, exactly. He's doing a great job on YouTube, and I think you would benefit. For me, I very often on weekends I look at the portfolio and over and over and over again, and I look at the percentages, and then I make a commitment that this week I will maybe trim this position because in this one I believe less than the other one. So if I have Alibaba, let's say that I think will grow more than Porsche or vice versa, I would trim it accordingly because let's say these are two big companies and they compete in the similar level of liquidity and so on and so forth. So I always try to think, okay, so for instance, now I'm very bullish. My favorite stock is actually Kier. It's a construction company. It's in the United Kingdom.
Yeah, I bought some of that on what you read about it.
They have amazing news. They just closed 120 million contracts, which covers their debt, and their PE is about 4 or something. And I see the forward piece went 175. So it's the cheapest stock that I have on my screens in the world. And again, they are making 120 million contracts. It's not a penny. If people went a little bit more from Reddit and US penny stocks and they did a little bit more London investing, we could see some amazing things there. People don't do it, but also I think because the brokers probably have. I also Capita is on my screen a lot today because it's suffering 5%, but it's a good price again.
Very volatile. So, the last half an hour has been very volatile. The US market just dipped like crazy there and bounced off of minus
a lot of volatility.
TRXC went from
I've just seen 14. A lot of.
TRXC went from plus 14 to minus 7%. Now it's back up to plus 7%.
It's extremely volatile.
It's crazy, guys. It's crazy. It's crazy.
Wow. Yeah.
Like in gold, what's gold doing? Let's see what gold's doing. Because you just know gold, yeah, it's minus 0.44%, but GSK is up. Is it still up? It's up 1.9% today. AstraZeneca. So a lot of these volatile days, AstraZeneca and GSK will kind of behave like water. It'll just keep the portfolio a bit tighter.
But it's great if you think about it. I see 1.1913 because I have on my screen here is 15-minute delay. But this is a great return. This is a good return for a month,
Yeah. I mean,
so on a volatile day where UK is going down, if you have a stock that's going almost 2% up, it's really a lot. I just wait for the times where it's normal. More normal is like 0.5% movement is normal movement, and everyone is now so used to making 100% a month or something.
I've been telling. I'm a bit jealous. I've been telling you to buy GSK since I met you, but you didn't want to buy it. You bought it right at the bottom there, man.
have a really good track record with that stock. So I always remember that you have it. So I'm like, okay, if Nikos has so much of it, there's something in it. And every time I buy it, it's completely smashed. So and it tends to do this.
Yeah.
If you look at the graph, so if I look at my track record, I don't know if I have 100% success rate there, but I always manage to buy it when it's very low because I'm not such a big fan. You say they are very good for their leadership and so on. I know some of the things because they partner with Atenex that I like quite a lot, but I always like those. I like those biopharma companies that are maybe between, let's say, 30 and 150 million dollars, but they're doing something amazing. They are innovating. That I did the disruptive innovation with Professor Clayton Christensen at Harvard. So I always look at this. To me, biotech or biotech or healthcare, I always look for some cutting edge innovation because I'm not a software developer, so I cannot compete with people like Jay who comes from gaming. He will know his AMD semiconductor better than I know my AMS in Zurich. I cannot compete there. But biotech I really like because I almost ended up working for AstraZeneca. To be honest, I went to their graduate program with a place close to Wayne Rooney's villa in Alderley Edge. And, I was quite impressed by the company. And they have really. Oh, I see a notification that my VXX rises 7.7%. So we're going down in the US, huh?
Yeah, that was high, man. Look at that spike from.
Can you still see me?
Yeah, yeah.
Okay, good. Well, I will see if we should buy something because maybe we do it live. I'm quite. Let me just see. Yeah, what I will do? I will support your country more. I'm buying. Oh, let me just first click it, so I have it. I just bought more Capita.
Okay, nice. Let me check. I've got some Capita. Been holding that for about 2 or 3 months now, actually.
I sold it with a massive profit, over 100%, I think. But now I just rebought it, and sometimes that makes me very happy. That's also you should do that sometimes, I think, Nikos, because we are active. We're very active. People should appreciate that. We watch it every day. Sometimes we speak in the morning, right, about what's happening, which is also very useful because you have a different lens. I think what I hope for you is that you will get more copiers who appreciate defensive stock because you really have a different view on the markets than most. I'm quite now well known, always being the black sheep, always doing something different, always selling Tesla, always buying in Europe. Now obviously TRXC is, before it was just Aston Martin, right? That I became very popular pushing that stock for obvious reasons. I talk about brand value. Now everyone caught up with that. And now TRXC is really kind of mine, bingo as well. But, so I've been quite vocal. I have a lot of tools. I have a lot of experience. So I could really attack it with a very big amount of confidence and very often, not understood at the beginning. But if I push it to be right, obviously some people join on board because they feel very safe. I write about it a lot, so I'm actually I take a huge risk of being very wrong. I put a lot of money behind something that no one else is putting, and then so it's a big risk of people saying, "Oh, you know what? I told you," or "You're wrong." Used to it. I'm used to it. You really improved the communication game. I've alluded to that before. I've recommended to you to be a little bit more vocal, a little bit more, because you guys, software engineers, you're very smart, but you under communicate. You just put something in one sentence or one line.
Yeah. I still do that now and again. I'll go on there and say something.
Line of code, which is good for everyone that follows your train of thought. But someone who doesn't and falls under your feed, they need more context. That's why what I do is I try to put one post that's really deep research. I would only post those if I had a choice really, but then I also feel the need to communicate with my investors because I know they read. I have now about 7,500 followers. I know they read it, and I also know that people read it from outside, from my website or whatever. So I think it's important, and I think your time will come. I think maybe it will come when we see some correction, because then those kids who just have biotech, well, they just be wiped out very, very quickly. Although, to be honest, Nikos, I'm starting to think that some of it is here to stay because, the world has changed, and whether it's Robinhood or Reddit, it has some power. I mean, to me, I'm not a regulator, and I've never been friends with regulators. Let's just put it this way. I do believe on an open market and efficient market, and I like when people can do what they want with some, I don't think I should do. So I'm actually glad that eToro is very careful with their PIs, because we should have some limitations because we are managing other people's money, and it's a honor, but also responsibility. But it's some of these people will really suffer. But I'm saying that some of the social media tools make sense, but it is borderline illegal, because I cannot be like, Nikos, let's put all our money of life on capital and let's do it at 8 a.m. in the morning. Well, it's not. I don't. It comes close to market manipulation, and for me, it's illegal. So, what's happening on Reddit or Robinhood? If I were a financial regulator, I would be quite hard on it, because I think it's not fair. I'm not on those platforms, but I know people who swing and day trade just based on that, and they make fantastic return. And to me, it's market manipulation. So I don't want to know. I'm not on Reddit. I don't even know fully what Robinhood is, apart that every day they talk about it on Bloomberg. And for me, I just stick to what I know, and for me, I have a moral code of conduct for stocks as well, which is slightly different, maybe to Jay's, who will say I buy corporate social responsibility companies. And there's this big guy, I think you were commenting recently, who just buys green stocks. So that's a very trendy thing to do. I'm a bit of a dinosaur, wearing a tie and doing things like we used to do in finance, which I feel quite lonely doing that on eToro, but it's the only way I know, and thankfully it brings results. But I think your time will come when those social media platforms don't work that well, and I just wonder when these people will take profits, because that's when we will see a big.
They'll be wiped out, because it's like a drug. Once you're making that kind of percentages, you can't. You get an idea that you're just going to make about £100,000, £200,000. You're going to be able to retire, like people that bought Bitcoin early, and they think, okay, I'm willing to risk losing this money I've gained so I can live like this millionaire. But that's when they lose all the money, and I don't see people. One of the guys who bought a lot of game stock or something like that, I went on his profile and said you should sell it now, and he's like, yeah, I sold some, but these people just. Yeah, they can ride this wave of this one stock, and long term, it's not very safe to rely on these pumps, because they go down just as fast, if not faster.
Yeah, well, it's my screen. It shows it's 62% up. 69% up. It's over 100 now. So it's this game's, and it was a short for me at 40. And I actually had a short. I think I made money on it. I can't remember. Thankfully, I'm not short on it anymore. But as he says, 114, 70. It just goes so quickly. And I think it's extremely risky. To me, it's like someone started an engine, they're already at 300 kilometers per hour, and you actually jump on the riding Ferrari, as a passenger. It's. I don't know how people even have the nerves to do it. To me, the risk jumping such extremely high, but
I mean, I bought this. I've been watching Norwegian Airlines for over a year, and I actually had it when it was worth like I don't know 100 times more than it is now. But I've been wanting to buy it for a while, and suddenly eToro opened up at like point. I think it was like point 0.3 kroner, so I had to buy quite a large position to get into it. So I bought it. It was quite a bit of a risk, but I did really well on that stock. I took some profit. Must have made at least 100%, and I've still got it. But for me, holding that is not that risky because I've
Yeah,
been following the news every day about that
sure.
stock, and I'm just leaving the longs on there because the government will support it if they get over
Exactly.
450 million from
Yeah,
investors.
I think the difference between us and others is we want to buy something safe to make sure we make 20%. And both you and I manage quite a big portfolio that would be enough for Black Star. I was one of the times I was scared the most is when I read that Jay has to increase equity to meet Black Star. I thought, well, this guy should be making this a month. How is it possible that he has such a small portfolio? I don't know all the history about it. Maybe he just didn't want to increase it to dilute the copiers. I will not comment on that. The guy makes amazing numbers. But if you manage $5,000, you can maybe do whatever you want. But if you manage 10 times more, 20 times more, well, then maybe 20% a year is actually quite a lot, because it's a yearly salary if you make 20% in a month. So it's I think people with slightly larger funds would be better to off investing with us, and people who just maybe if you just put $200, maybe it's good to buy a penny stock because you want to grow with it, so that's fine. But I would say that people put a considerable amount of savings, um, make your
Yeah, I'm
own
not. I'm
decision.
not going to play around with stuff that pays my bills. My portfolio is very important to me. Very, and for you as well.
Yep.
It's our income, and we're very protective of it.
There's a book called Skin in the Game, and that's why we in finance we always like buy side. Always look up to the buy side, meaning investment banking is sell side, right? It's like advising mergers and acquisition, advising on IPOs. Buy side is doing it actively, so it's a financial hedge funds, private equity. In private equity, you get paid by how much money you make buying and selling companies. That's the main income. They get a beautiful amount of money, but they have the most skin in the game. Very often, the management has almost 100% of the acquired company, and then I think that's what makes eToro great as well for PIs is that they manage their own fund as if they would on their own without external copiers, but they have other people. But they have skin in the game,
Hmm.
and it's eToro smart to require. So they require $50,000 for Black Star, which I hope to reach in not so distant future. It's good because $50,000 it's a considerable amount
I
of
wouldn't
money.
trust that to a bank or private equity. I trust myself because I know what I'm capable of. I know my limits. I know what it's like to lose a lot of money, like in March and April. But I managed to see how my old emotions responded. And at the bottom of March, I went and put in more money because it was at the bottom of and just ridiculous prices, and that's how we made got up to 30% of the year. And
Yep.
yeah, we'll see what happens the rest of the year.
Yeah, tell me why you hold so much gold. So I bought a gold ETF today again, but why is it more? I prefer like VIX is going 7%, right, on a small bump in the US, whereas gold is still close to zero. So I'm not sure. I made quite a bit of money on silver and gold as well, but silver is a bit more volatile and grows a bit more quickly. Why do you like gold so much?
Well, I mean, look at what the governments are doing. They're basically paying people to sit at home, not encouraging people to work. And companies
Yep.
are basically having a bunch of employees on the books for basically zombie jobs, which the government has just shut them down. And in America now, people are they're not incentivized to work. So basically, the economies are printing a lot of money, and this money is not producing anything. So the money that is out there will buy less stuff that's been produced. So it will lose its value because people just increase the prices because there'll be less supply, and gold will maintain its value, because gold will always buy what it historically used to buy. Like wheat was kind of priced in a certain amount of gold. You could buy a certain amount of wheat, and you can still buy that certain amount of wheat with the same amount of gold. I haven't researched myself, but that's what I've heard. And I don't trust a lot. I like Ethereum because as a software developer, it has some utility. But Bitcoin for me is not an alternative for gold because there's nothing you can do with it. All you can do is a supposed store of value, but you can't do anything with the value you have. Gold, you can print it. You can use it for dentistry. You can use it in electronics. You can use it for jewelry, insulation and spacecraft equipment. Well, it is something with spacecraft, but you see a lot of gold, and space is very important these days, and space exploration. And I had gold a couple of years ago, but I did quite badly with it, and I kind of stayed away from it. But I learned more about these gold instruments that you don't have to pay any fees on, and so I've bought into mostly gold mining stocks and gold GLD, and then I've got some actually real, so the gold that's you pay a little bit of fee on, but I just, for whatever reason, I'm holding that right now.
Fair enough. I actually like metals quite a lot, and I invested in copper now. One of my investors is quite bullish on this one. And so I bought IAU. That's for gold. It's iShares Gold Trust. So
IAU?
Yeah. You should maybe take a look if you want to increase. I don't think you have this instrument. It's quite, the volatility of it is much lower. So I like it, and it's actually an interesting level.
I see what you mean. Yeah, it's very, very low volatility.
Yeah, so I like, because now I also a bit like, if it makes 2% maybe until end of February, I'll be quite happy. I just see that my VIX is really doing well today. So very interesting day.
Yeah.
We wiped out the gains basically now. Okay, so I was 1.75% up, and now I'm 0.5% up.
Yeah.
So TRXC went down a bit, and then some others. So
gold is doing quite well. It's minus 0.25 in the apps here. GSK is helping the portfolio today, behaving like water. AstraZeneca as well.
Yeah.
Ocado, breast stock for the stay-at-home stuff. I found it's the best hedge. Whenever the market panics with COVID, Ocado is the one stock that is.
Yeah, I know you like that one. Today it's quite a big down on the close, in UK very much so, but in Europe in general, some of the stocks were quite
Today
bad.
is horrible for some of the airlines, man. EasyJet 7% down. IAG, which owns BA, minus 7% down.
Wow. Quite a big down.
Rolls-Royce, another 4% down. I don't know what's wrong with Rolls-Royce. It was supposed to be bouncing back a little bit.
Interesting. Yeah. So do we have any final things before we wrap up the call?
I think we're good. This is good, just to get our thought processes out here. Sometimes people just like, sometimes a good unstructured podcast is good. And I appreciate your time, and it's been fun knowing you so far, and it's always a little bit of fun just comparing what we're doing and all that stuff,
Absolutely, yeah. It's fun. We're colleagues practically, even though we're not formally employed by eToro, we do it independently, and it's good to have a healthy competition. I've been competing recently a bit, but hopefully you catch up. I think February maybe red actually. I'm preparing for that. I'm thinking all the time that the first half of February will be. So we'll see how people perform in that environment. Very, very interesting to watch.
Yeah, I mean, I sold my FANG stocks. I got rid of my Apple, partly because of what they did to Twitter. I've no Amazon, no Google. I'm short on Twitter, but I think those things are over. I'm not exposed to Amazon. I tried a little bit of a short, but I got stopped off at -3%. No Tesla, but Neo. I think Neo can grow. And
Yeah.
but
Cool. Nick,
okay.
thanks a lot.
Thanks,
Keep
Matt.
up
MJ.
work with everything you're doing, and we speak soon.
Okay. Thanks for friends on YouTube and Learn With Us audience. Hope you enjoyed that podcast today with MJ. Bye bye.
Bye bye.
Cheers.